오늘 날씨 진짜 좋네요. 그죠? 이런 날 딱 비트코인 얘기하기 좋은 것 같은데요.
그러게요. 햇살이 아주 그냥.
안녕하세요. 오늘은 얼마 전에 끝난 비트코인 서울 2025, 그 뜨거웠던 현장을 다시 한번 좀 되짚어보는 시간을 가지려고 합니다.
네.
혹시 컨퍼런스에 못 가셔서 아쉬웠던 분들이나 아님 주요 내용을 다시 한번 좀 정리하고 싶다 이런 분들께 오늘 저희 얘기가 딱일 것 같아요.
네, 맞습니다. 세션들이 다 좋았는데 그중에서도 오늘은 제임스 체크라고 하죠. 이분의 반감기 사이클의 종말, 발표, 이걸 좀 집중적으로 파헤쳐 보려고 해요.
아, 그거 저도 되게 인상 깊게 들었어요.
그렇죠. 보통 우리가 비트코인 가격하면 4년 반감기, 이걸 딱 떠올리는데 체크는 그게 전부가 아니다. 이런 관점을 제시했죠. 온체인 데이터를 봐야 한다. 이걸로 시장 참여자들이 진짜 뭘 하고 있는지, 뭘 느끼는지 이걸 봐야 한다는 거였어요.
맞아요. 그래서 최고점이 얼마까지 갈까요? 이런 질문보다는 그러니까 시장 참여자잖아요, 우리가. 우리 행동을 이해하고 이 변화하는 시장에 어떻게 발맞춰 가야 하나 여기에 좀 초점을 맞춘 게 저는 되게 신선했어요.
네네.
자, 그럼 제임스 체크가 우리한테 어떤 이야기들을 들려줬는지 한번 제대로 들어가 볼까요?
좋습니다.
체크가 딱 짚은 게 이 비트코인 사이클이라는 게 사실 반감기라는 기술적 이벤트 때문만은 아니라는 거였죠?
네, 핵심은 그게 아니라고 봤죠.
오히려 시장에 들어와 있는 사람들, 이 사람들의 감정, 탐욕이라든지 아니면 공포, 이런 아주 인간적인 행동들이 진짜 사이클을 만드는 동력이다 이렇게 강조하더라고요.
그렇죠. 그래서 미래 가격 예측하고 이런 거에 힘 빼지 말고 차라리 우리 자신의 심리 상태를 잘 들여다보고 관리하는 게 훨씬 중요하다. 이런 얘기를 했어요.
일리네요.
네. 그러면서 과거 시장을 이렇게 좀 단계별로 나누더라고요. 처음에는 개인 투자자들이 막 들어오던 시기, 그 다음에는 레버리지나 파생 상품 때문에 변동성이 엄청 커졌던 붐앤버스트 시기?
아, 그때 정말 정신없었죠.
네. 그리고 FTX 사태, 이걸 기점으로 해서 시장이 좀 질적으로 달라졌다. 이렇게 봤어요. 2023년 2월부터 보면 가격 움직임이 예전이랑 좀 다르잖아요. 좀 더 안정적이면서 이렇게 계단 오르듯이.
네, 맞아요. 계단식 상승.
네. 그게 이제 시장이 좀 더 성숙해졌다는 증거다. 이런 진단을 내렸습니다.
아, 그럼 시장 참여자들의 이런 복잡한 마음이나 행동을 좀 객관적으로 보려고 체크가 쓴 도구가 바로 그 온체인 데이터군요.
정확합니다.
특히 그 실현 시가총액, 리얼라이즈드 캡, 이걸 되게 강조하던데 이게 우리가 보통 아는 그냥 시가총액이랑은 뭐가 다른 건가요?
아, 그거 좋은 질문인데요. 우리가 보통 시가총액하면 현재 가격에다 총 공급량을 곱하잖아요.
네네.
근데 실현 시가총액은 그게 아니고 각 비트코인이 마지막으로 이렇게 딱 거래됐을 때 가격, 그걸 기준으로 가치를 매기는 거예요.
아, 실제 움직인 가격 기준이군요.
그렇죠. 그러니까 시장에 진짜로 돈이 얼마나 들어왔는지 혹은 나갔는지 이 실제 투자된 돈의 흐름을 훨씬 잘 보여주는 지표라고 할 수 있죠. 그래서 이 실현 시가총액이 꾸준히 오른다. 이건 건강하게 자본이 들어오고 있고 네트워크도 잘 커지고 있구나. 이런 신호로 볼 수 있다는 거예요.
그렇군요.
네. 여기에다가 이제 장기 보유자들, LTH라고 하죠. 이 사람들이 어떻게 움직이는지, 또 시장 전체가 평균적으로 얼마나 수익을 보고 있는지, MVRV 지표 같은 거, 이런 것들을 같이 보면서 지금 시장이 너무 과열됐나? 아니면 아직 괜찮나? 이런 위험 수준을 가늠하는 거죠.
아하.
근데 중요한 건 이게 미래 최고점을 딱 찍어주는 그런 수정 구술은 절대 아니고요. 어디까지나 위험 관리 도구다. 이걸 꼭 기억해야 합니다.
네, 위험 관리 도구. 그리고 이번 사이클 얘기하면서 절대 빼놓을 수 없는 게 바로 비트코인 현물 ETF 등장이었죠.
아, 맞습니다. 그거 정말 큰 변화죠. 이전 사이클이랑 비교하면 진짜 가장 큰 차이점 중 하나로 이걸 꼽았어요.
기관들이 들어온다는 게 확실히 다른 점이긴 하죠.
네. 기관 투자자들 자금이 대규모로 들어오기 시작하면서 시장의 어떤 체급 자체가 달라졌다는 거죠. 그리고 이게 최근 우리가 봤던 그런 계단식 상승 패턴에도 영향을 주고 있다. 이렇게 분석을 했고요.
금 ETF 때랑 좀 비교하기도 하던데요.
맞아요. 과거에 금 ETF가 처음 나왔을 때 그 이후로 금 가격이 장기적으로 쭉 올랐던 것처럼 비트코인 ETF 역시 앞으로도 꾸준히 수요를 만들어주는 기반이 될 거다. 이런 시각인 거죠. 실제로 시장이 1조 달러 가치를 딱 지켜내고 이제 2조 달러를 향해 가는 모습 자체가 이걸 증명하는 거 아니냐? 이렇게 보더라고요.
와, 스케일이 정말 커졌네요. 그러면 체크가 말하는 그 시장 최고점이라는 건 구체적으로 어떤 모습일까요? 단순히 뭐 얼마다 이런 가격은 아니라고 했잖아요.
네, 그게 중요해요. 최고점은 특정 가격 숫자가 아니라 상태다. 이렇게 설명했어요. 상태. 네. 그러니까 저점에서 매수한 사람들 있잖아요. 소위 말하는 스마트머니. 이 사람들이 이제 이익을 실현하려고 물량을 막 던지기 시작하는데 그 물량이 새로 시장에 들어오는 수요보다 더 많아지는 시점. 딱 그 상태를 최고점이라고 본 거예요.
아, 수요 공급의 균형이 깨지는 시점이군요.
그렇죠. 그래서 그때 나타나는 신호들이 뭐냐면 장기 보유자들, LTH들이 계속 팔고 또 오랫동안 가만히 있던 오래된 코인들이 갑자기 대량으로 움직이고 MVLB 지표 같은 걸 보면 미실현 수익이 엄청나게 높은 상태로 나타나고 이런 것들이 그 신호가 될 수 있다는 거죠.
근데 진짜 흥미로운 건 바로 그때 대부분의 일반 투자자들, 체크는 이건 좀 직설적으로 경험이 적은 자금, 뭐 덤머니라고 표현했는데 이 사람들은 오히려 더 공격적으로 산다는 거 아니에요?
아, 네. 그 부분이 진짜 핵심이죠. 소름 돋는 부분인데
네.
그래서 MBRB 같은 지표가 역사적으로 봤을 때 진짜 높은 수준, 예를 들어서 평균 수익이 막 3배 이상 되는 구간에 들어섰다. 그러면 가격이 뭐 조금 더 오를 수도 있겠죠. 아주 가능성이 없는 건 아니지만 통계적으로 보면 거기가 거의 정점일 확률이 훨씬 높다는 거예요. 그러니까 아무리 자기가 강력한 호들러, 장기 투자자라고 해도 그때는 추가 매수는 일단 멈추고 오히려 좀 보수적으로 시장을 보면서 위험 관리를 하는 편이 훨씬 현명하다. 이런 아주 현실적인 조언을 했습니다.
와, 정말 현실적인 조언이네요. 무조건 버티는 게 능사는 아니다.
그렇죠. 데이터는 그렇게 말해주고 있으니까요.
결국 제임스 체크의 메시지를 한마디로 하면 미래를 맞추려고 애쓰지 말고 온체인 데이터를 통해서 시장 참여자들의 심리랑 행동을 잘 읽고 우리 안에민 그런 감정적인 흔들림에 맞서서 원칙대로 대응해라. 뭐 이런 거겠네요.
장막합니다. 딱 그거예요.
저는 개인적으로 들으면서 시장이 막 오르락내리락 할 때 감정에 휘둘리지 않고 계획대로 딱 움직이는 게 진짜 중요하구나. 이걸 다시 한번 좀 깨달았어요.
저도 정말 공감합니다. 특히 무조건 존버 외치는 홀더라도 시장이 명백하게 지금 너무 뜨거워 이런 신호를 막 보낼 때는 그때는 좀 매수를 멈추고 위험 관리에 집중해야 한다. 이 주장이 되게 현실적으로 와닿더라고요. 데이터를 보고 위험 신호를 알아차리고 또 시나리오별로 어떻게 대응할지 미리 좀 계획을 세워두는 거. 이게 정말 중요하구나 싶었어요.
네, 오늘 저희가 나눈 이 제임스 체크 이야기가 여러분께서 비트코인 시장을 이해하고 또 각자의 투자 원칙을 세우시는데 조금이나마 어떤 영감을 드렸으면 좋겠습니다. 여러분은 체크의 분석을 들으시면서 어떤 생각을 하셨나요? 저희는 다음 시간에 더 흥미로운 내용으로 돌아오겠습니다.
Welcome back to the deep dive. Today, we're doing something a little different, something I think is truly special. We're taking you on a unique retrospective deep dive. We're looking back at one of the most talked about sessions from Bitcoin Seoul 2025.
Ah, yes. That was quite the conference.
It really was. And we're revisiting James Check's incredibly insightful presentation, the one called The End of the Halving Cycle, predicting Bitcoin's peak and future with on-chain data.
A definite highlight for sure.
So our mission here really is to offer you a shortcut, kind of to the core of that session.
Yeah, distill it down.
Exactly. For those of you who maybe unfortunately couldn't make it to Seoul for the conference, consider this your essential guide. What did you miss?
And even if you were there.
Right. Even if you attended, think of this as your chance to revisit, maybe reinforce things, let those key takeaways really sink in.
It's easy for things to get lost in the noise of a big event.
Totally. But it's important to frame this correctly. Our goal isn't, predicting the future price of Bitcoin down to the dollar or the day.
No crystal balls here.
Definitely not. Instead, we're here to understand the market dynamics, the fascinating stuff, and crucially, the human psychology that drives it all.
That's absolutely right.
Yeah.
James Check's approach, it's critical because it really challenges so much of the, let's say, conventional thinking around Bitcoin cycles.
Mm-hmm.
He offers this data-driven lens
Right.
into what truly moves the market. And spoiler alert, it's less about some, mystical cycle tied to a date.
Like the halving itself being the magic trigger.
Exactly. It's far more about human behavior. So what we're really going to unpack here is a framework, a way to understand your own psychology in the market.
Ah, okay.
Because, as we'll see, our natural instincts, they often lead us astray, straight into traps, really.
Okay, let's truly unpack that then. James Check's core idea. It's fascinating. A real paradigm shift for a lot of people. He argues basically that while everyone's hyper-focused on the halving, as the driver.
It's a main event.
Yeah. Anticipating market peaks is actually less about specific dates. It's more about understanding the emotional hardware of the people in the market.
Greed and fear. The classics.
The classics, exactly. He makes a really compelling case that those human elements are the real engines here.
And what's really interesting is that Czech says, look, trying to predict a future price peak, it's often futile. Like, just let that impulse go.
Easier said than done sometime.
Oh, absolutely.
Yeah.
But he highlights that the real power, where you have leverage, is in understanding when people are most likely to sell.
Based on emotion, not a price target.
Based on their collective emotional state, yeah.
Yeah.
Not fixating on some random number. So if you connect this to the bigger picture, it means your decisions, grounded in understanding human behavior.
Not market forecasts.
Right. That's what you can actually control. It empowers you to act, rather than just, react to the noise.
That is a powerful shift. Okay, but let's talk about the market itself. Bitcoin has grown. I mean, it's huge now.
Unbelievably so.
We're talking, what, a $2 trillion asset now? Compared to maybe $3 billion back in 2017?
It's staggering. That's like a 600-fold increase, roughly. Just massive scale difference.
Mind-boggling. So with that kind of growth, how has the Bitcoin market itself changed? Especially after big shocks like, say, the FTX collapse. It feels different now.
It absolutely does feel different. And yeah, the data backs that feeling up. If you look back at 2017, like you said, tiny start, maybe $3 billion. Pure retail excitement, early adopters, gut instinct about this weird new thing called Bitcoin.
Right.
And crucially, almost no leverage, no derivatives, just raw, a wild ride.
A Wild West.
Totally. Then from 2017 up to 2022, that's when we saw what Czech calls those high-amplitude boom and bust cycles.
Okay.
That's when leverage and derivatives really came in, big time, creating these explosive highs but also devastating lows.
Leading up to 2022.
Exactly. Culminating in those massive failures, FTX, Celsius, all those firms. A real reckoning.
So what happened after that, post-FTX?
Well, from 2023 onwards, we've seen a pretty remarkable shift. It's become more of a quiet, trend-driven price movement.
Quieter? How so?
The market just feels more mature. Czech describes it like a nice sine wave function.
Okay, sine wave. Break that down a bit. Not everyone loved math class.
Fair enough. Think less like a crazy vertical roller coaster, and more like calm, rolling ocean waves, gentle, more predictable ups and downs.
Oh, okay. Smoother cycles.
Exactly. This stair-step price movement is actually really significant. It lets people adapt psychologically to new price levels, makes them feel normal.
Right, so $100 K Bitcoin doesn't sound as crazy as it once did.
Precisely. It feels kind of normal now, almost like $20 K did just a couple of years ago. The market's adjusting, building support as it climbs.
That makes a lot of sense. A more mature market, smoother waves. So, speaking of maturity, the ETFs. What does this mean for the current cycle? What's really different this time?
That's the million-dollar question, isn't it? Or maybe the multi-billion-dollar question now.
Probably.
So, yeah, people could always buy Bitcoin. But the ETF structure, that's totally new. And its impact is, well, it's already monumental.
How so?
The key takeaway is the sheer unprecedented scale of institutional demand they've unlocked.
Ah, the institutions.
Yeah. We're not just talking individuals anymore. We've seen, over $45 billion in new capital flow into these ETFs in record time.
Wow.
They are by far the most successful ETF launches ever across all asset classes, not just crypto.
That's huge context.
It is. This is big money coming in, not just retail. And that influx is what's driving that healthier stair-step price movement we talked about.
Instead of the crazy parabolic spikes.
Exactly. Institutions, they tend to have, more sophisticated risk management, longer time horizons, slower capital deployment.
Less emotional, maybe?
Generally, yes, compared to those rapid retail surges. And if you think about Bitcoin's history, it's actually pretty robust now.
How do you mean?
Well, Czech points out, it's been trading for like 40% of gold's entire existence. And gold's been around 5,000 years.
That puts it in perspective.
Right. Or if Bitcoin were a stock, it's like it started trading back in 1942. It's one of the most mature assets out there by that measure.
Never thought of it that way.
And looking forward, Czech suggests these ETF inflows could potentially be sustained for, say, 8 to 10 years.
Wow. Real.
Potentially absorbing maybe up to 4 million Bitcoin. That points to a really significant, lasting structural shift in demand. It's not just a flash in the pan.
Okay, so the landscape is changing, maturing, institutions are here. But if we can't predict the future price, what can we actually do?
Right.
How does data help us understand what we as humans are collectively doing in this market? This feels like the core of Check's analysis.
It really is. He introduces several key on-chain metrics. Think of them as tools, right? Tools to understand human behavior, not just chase the price.
Okay, like what?
First one, maybe the most important, realized cap.
Realized cap. Got it.
What's fascinating here is how it tracks the true capital inflow. It's not market cap, which is just current price times coins.
Oh, so what is it?
Realized cap multiplies each coin by the price it was last moved on the blockchain.
Ah, so it remembers the cost basis.
Exactly. If you bought at $10K and held, that $10K value stays in the realized cap until you move it. If you sell it $100, the buyer puts $90K more capital into the system.
I see. So a rising realized cap means?
Healthy adoption, new capital entering, consistent growth, even through bear markets. It shows more money being committed at higher prices over time.
That's a powerful metric. What else?
Then there's the coin cluster or heat map. This is awesome. It's like having X-ray vision at a poker table.
Okay, I like the sound of that.
It lets you see where coins were acquired and how long they've been held. You can literally see different groups.
Like who?
Well, you see the dark poker clusters. Those are the true OSHA dealers, right?
Yeah.
Hold on for dear life.
The veterans.
Yeah, people who bought at previous peaks may be held through all of 2022.
Oh.
You know, like from 64K down to 29K, maybe even 16K after FTX. They fought every instinct, and now they're finally back in profit.
So it visualizes that conviction?
Yeah.
Or stubbornness?
Precisely. And you also clearly see the very brave and smart people, as Check calls them.
Where are they?
The ones who bought at 16K, when everyone was saying Bitcoin is dead after FTX.
Right, maximum fear.
Maximum fear. And many of them are still holding those coins, sitting on huge gains.
Wow. And what about more recently?
The green zone from 2024 is really interesting, too.
Right.
Remember, back in 2021, the market tried twice to cross $1 trillion market cap, got smacked down both times.
Yeah, I remember that.
But in 2024, even with things like, the German government selling 53,000 BTC, every time the market dipped below $1 trillion, it bounced right back.
Resilient.
Super resilient, validated that level. Then we went straight to $2 trillion. That really showed the market's new maturity and strength.
It's amazing how the data just lays it all out. Who's doing what? What other data points does Check use?
Building on that heat map idea, we look at long-term holders, or LTHs.
Okay, LTHs.
These are what Check basically calls the smart money, people who've held their Bitcoin still for more than 155 days.
So they're not reactive traders?
Generally not. Historically, they accumulate steadily, quietly. In bear markets, that's the blue zone you see on the charts. Buying when nobody else wants to.
Buying the fear.
Exactly. Then, when demand picks up in a bull market and their unrealized profits are high, they start to sell strategically.
Okay.
So if we see smart money consistently selling, especially for like 14 days straight, that's a strong signal. We might be entering an overheated zone. They're basically offloading to new demand.
That makes sense. What else?
We also look at unrealized paper profit, often shown with the MVRV indicator.
MVRV. Heard of that one.
Yeah, measures how much profit, on average, people are sitting on but haven't actually sold yet, based on their cost basis. When this indicator gets high, like into the yellow or red zones on the charts, historically, that means we're getting close to a market peak. People are tempted to take those paper profits.
Turn them into real money.
Exactly. Reaching the red zone is really telling. It's only happened about 5% of the time in Bitcoin's history. Signals extreme overvaluation.
Doesn't mean it stops right there, though.
No, not necessarily. It can sometimes go higher in a short, crazy burst, but the odds are heavily stacked against it at that point.
Got it. Any other key metrics?
One more big one. Realized profit. This one directly shows the amount of actual profit taking by old capital.
Old capital, meaning?
Coins bought cheaply a long time ago that are now being sold at much higher prices.
Ah, the early birds cashing out.
Precisely. It's a key indicator of when smart money is selling at what they perceive to be the top. When you see a huge spike in realized profit, especially from those old coins on the heat map.
The veterans are leaving the party.
That's a good way to put it. The people who got in early and held through everything are finally taking major gains off the table, like the big whales exiting the pool.
Okay, so it's this whole picture. Who's holding, buying, selling, all visible on-chain. That's incredibly powerful.
It is.
But here's the kicker. Why are we, as humans, so reliably bad at this? Why are we wired to buy high and sell low exactly when the smart money is doing the opposite? It feels like a design flaw.
It's fascinating, isn't it?
Yeah.
And maybe a little humbling. James Check's observation is pretty stark. The human brain is practically designed to lose money in markets.
Designed to lose. Ouch.
Yeah, if you just follow your raw gut instincts, you will almost inevitably buy the top and sell the bottom. It's almost counterintuitive for survival in these markets.
So success means fighting instinct.
Actively fighting it. Yeah, actively hodling through those brutal bear markets, gritting your teeth when your brain, the news, your friends are all screaming, get out.
And FOMO plays a huge role here, I imagine.
Oh, massive. FOMO, fear of missing out, it's incredibly powerful. It drives that irrational buying right at the peak. We ignore all the warning signs from the data.
Because the pain of missing out feels worse.
Exactly. The fear of not owning something going vertical can feel more painful psychologically than the risk of buying and watching it tank. Our brains just aren't wired for this long-term probabilistic thinking.
We want immediate gratification, avoid immediate pain.
Right. And we fall prey to other biases too, like herd mentality, just following the crowd, or confirmation bias, only looking for info that confirms we should buy when it's soaring.
So the pattern is smart money sells high.
And dumb money rushes in. And again, dumb money isn't about intelligence. It's about behavior driven by emotion, not data. Often using crazy leverage, too.
Which pours fuel on the fire.
Totally. Leads to this oversaturation of demand that the market just can't sustain. It sets up the crash.
Okay, that's a stark picture. So, if we accept we can't predict the exact price and our brains are kind of working against us, what does a peak look like in the data? What are the signals we should watch for?
Yeah, good question. A peak isn't usually one single flashing light. It's more like a dashboard lighting up with multiple warnings at once. A confluence of signals.
Okay, like what?
First, you see that smart money selling. Those long-term holders consistently offloading coins. Not just one day, but maybe 14 consecutive days or more. A sustained pattern.
Signal 1, LTH is selling hard.
Signal 2, old coins moving. That heat map, the deep purple clusters, coins dormant for years, suddenly start moving to exchanges and getting sold. Big realized profits being taken.
The OGs are cashing out.
Exactly. Signal 3, demand oversaturation. It's not that Bitcoin's suddenly bad, it's just that the demand, even from ETFs, gets overwhelmed by all that selling pressure from holders taking profit.
Finite demand meets massive supply.
You got it. And this often gets worse because of excessive leverage.
Yeah.
People using 50x, 100x leverage near the highs. Highly unstable.
Setting up for liquidation cascades.
Precisely. And finally, the price action itself becomes parabolic. Just goes vertical on the chart,
Right.
which everyone agrees is unhealthy, unsustainable, compared to that nice stair-step movement.
Right.
When all or most of these signals align, it strongly suggests you are at or very, very near a major peak. Even if price screams a tiny bit higher for a day or two, the air gets very thin up there.
So it's not one alarm, but like a whole symphony of alarms going off together.
That's a great analogy.
Yeah.
Telling you, pay attention, danger zone.
That's really insightful. Okay, this is where it gets really practical for you listening in. The market is like a tide, right?
Yeah.
You can't fight it, can't change it.
Nope.
The only thing you can really control is your own decisions when these things happen. So what does this all mean for you? How can you use this framework to make better decisions? Avoid those human traps.
Yeah, that's the crucial takeaway. It brings us right back to Check's core advice.
Yeah.
The goal isn't prediction, it's preparation. By understanding likely human behavior.
Prepare, don't predict.
Exactly. First step, actively manage your psychology. Know thyself, right? Recognize that when smart money sells at the top and the emotional crowd rushes in, you want to try and do the opposite.
Sounds simple, but hard in the moment.
Incredibly hard. Which is why predefined rules are absolutely essential. Critical.
Write them down.
Literally write them down before you need them. For example, if Bitcoin hits 120K, what will I do? If it hits 150K, $170. What's my plan?
Take some profit. Rebalance.
Could be. Or maybe, if it dips below a certain support level, maybe that's your signal to accumulate more if you have a long-term view.
Having the plan stops the panic or the FOMO.
It helps counter those emotional biases, yeah. Because you already decided when you were thinking clearly, look, Bitcoin probably will appreciate long-term, but it will have major pullbacks.
Okay, great.
Being aware of these dynamics helps even HO dealers avoid, say, deploying all their capital at the absolute peak, which means potentially sitting through a painful multi-year drawdown.
Right.
This on-chain data, it really is like that X-ray vision at the poker table. You see what others are doing collectively. It empowers you to make smarter, more deliberate choices for yourself.
So to wrap up our deep dive then, looking back at James Check's session from Bitcoin Seoul 2025, the core insight seems crystal clear. It's not about predicting the price. It's about understanding the market's psychology and maybe even more importantly, our own human tendencies. Those biases hardwired into us.
Absolutely. And this goes way beyond just Bitcoin, really. Human behavior, our emotional hardwiring, those are constants across all markets, all assets.
Timeless principles.
Totally. And if we don't actively fight those instincts, we will act like herd animals. And frankly, we'll probably lose money over the long run in these volatile markets. Our brains just want to react short term.
So the data is the antidote.
The data gives us the power, the advantage. It lets us counteract that deep instinct, make rational, calculated moves instead of just emotional reactions.
So the final provocative thought for you listening, knowing all of this, what predefined decisions will you make? How will you ensure you're acting like the smart money next time rather than just following instinct?
That's the homework right there.
It really is. For me personally, the biggest takeaway from really digging into this again is it's kind of liberating. Letting go of needing to predict the exact peak. Focusing instead on managing my own plan, my own emotions. It changes the game, makes it less frantic.
Yeah, I agree. And for me, what really stands out is just the profound realization that despite all the tech, all the market evolution, the basic human emotional responses, they're exactly the same as they've always been.
History doesn't repeat, but it rhymes with human nature.
Beautifully put. The data just gives us this incredible window into that timeless truth. It lets us make more informed, less reactive decisions. It really is about preparing, not predicting. And that's a powerful tool to have.
Couldn't agree more. Well, thank you for joining us on this deep dive.
Thanks for having me.
We'll catch you next time.